Is up, Diamond Club Pass members. Um, I wanted to quickly run through the spreadsheet that's dropping in this month's capsule so that you guys can figure out how many of your products or services that you need to sell to hit your goals. Um, so I created a product version and a service version, depending on what type of business you operate. Um, they're very similar in function. There's just a little bit of um, nomenclature difference, very minor. You could get away with using either one depending on, or no matter which kind of business you have. But um, yeah, two versions. To start, if you want to use this sheet, there's two ways you should do it, and there's one way you shouldn't do it. So the way you should not do it is to just go to the sheet that Adam and Allie are sending over to you and just kind of um, edit the live version that everyone sees. If you want to make a copy, it's a better option. So you can click on the file menu, make a copy, save it off on your own, do whatever you'd like to it, or you can download it as an Excel file or any of these other formats. Excel is probably the only version you're really going to use, but um, do one of those two, and you can use your own version. Um, cool. So let's start with the product. Just to give you a general overview of the layout here. Basically, this area here on the left is where you can make changes to assumptions, and it will drive an output on the right here, which is basically a summarized version of an income statement. So assumptions on the left, output or income statement on the right. Um, the green boxes are cells that you can edit assumptions for. Everything else, all of these other white values, just leave them be because those are calculated values. Okay, so you can make changes to green, don't change white. Um, so let's start on product, and for this example, we're going to use the example of a screen printer. So I've kept it super simple here, and we're just going to do three product offerings, a one color print, a two color print, and a three color print all on a t-shirt. Now, depending on what type of business you have, um, it may be a little bit not so straightforward as that, but do your best to fit it into three main categories. And you may need to consolidate um, low level product detail and just kind of roll it up into like a product category. It just kind of depends on what type of business you have. So, getting into the assumptions here. So, let's say that I sell a one color print to a customer for $15 and it costs me about $6.50 to produce. So that means, ink and labor and the t-shirt all add up to about 650. So these would be considered like your direct costs. So the costs that go directly into delivering your uh, product. Let's say for a two color print, I sell it for 17. It costs me 725. Three color print 19 and 8. The values below here are going to show you what your gross margin is. So this is for every one color print, I make $8.50 and it's about 56% gross margin. It'll calculate the other two as well. Um, so that is kind of like the general mechanics of that business. Now here's where you can add uh, how many units you forecast to sell in different time periods. So I use the label period 1, 2, and 3 instead of naming it month or year to kind of give you some flexibility in what time period you want to look at. So in this example, I'm just using a month. If you wanted to kind of zoom out and look at, all right, what does this look like over the course of 3 years? You could use the same uh, cells, just think of them as years. So for product one, I think I can sell about 250 in the first month, 350 month following, and then 450. Product 2, 200, 300, 400. Product 3, 250, 500, and 750. And you can then see for each period, if I sell 250 one color prints, my revenue would be 3750. My costs would be 1625, and I'd have about 2100 in gross margin. And it calculates that for each time period as well. So these are what I consider above the line assumptions, meaning they are what directly goes into calculating your gross margin on your output over here. Now let's go down to the below the line assumptions. In this example, the way I thought about it was it's a pretty small operation. I don't really have any employees. It's just me printing t-shirts. So I don't really have any payroll expenses, but depending on your individual business, it's very likely that you may have some payroll expenses for employees. So here's a space to put those. And again, these are period 1, 2, and 3. Sales and marketing expenses. So these are expenses that you're going to incur directly trying to sell your product. So in this example, it could be, we're running some Facebook ads, or I'm sending out some mailers or business cards or anything that is really trying to drive sales. So I said about $250 per month for that. And these payroll expenses are going to feed to your income statement under payroll expenses. Your sales and marketing expenses are going to feed to sales and marketing. And then all of the rest of these expenses, what I would call general administrative, are really just what it takes to get your business to operate. These are all going to consolidate at the bottom here and feed this line item on your income statement. So I've just put a couple general line items that I see in most businesses, but I also gave you some room down here to make some customize some of the line items that you're going to have that it's kind of hard to make a general sheet that everyone can use and make it specific enough. So this is your chance to drill into a little bit more detail into some of the categories that maybe you see in your business. So the general ones I have here are occupancy expenses, software, outsourced service, and office supplies. And I just plugged some general numbers in here, or some rough estimates of what I think it would take to run a one-person screen printing shop. And this is kind of what they total out to be. So in general, this scenario, we're going to sell period 1 about 700 units, period 2 1150, period 3 1600. The revenue, you can see that revenue is jumping up over the course of those 3 months. And my costs, my direct costs to deliver the product, and gross margin. Coming down, we don't have any payroll expenses in this scenario, about $250 in sales and marketing expenses per month, and then about $1,400, ranging from $1,400 to $1,800 in general administrative. And this is where you can see, all right, so this is the profit that I would estimate that I would make given all these assumptions come true. So that is the product version. Now let's jump over to the service. So as you can see, nearly identical setup. In this scenario, I'd like to use the scenario that we're a photographer, okay? And in this scenario, right now we offer 3 different types of services. So we offer professional headshots right now, and that's where most of our business is coming from in this kind of current year. So in this scenario, I was thinking about 3 years. So this is the current year, this is the following year, and this is the year after. And in this scenario, I'm thinking, I'm doing a lot of professional headshots. I'd really like to get into more weddings. So we have 2 packages that we offer, package 1 and package 2. So you can see professional headshots, we're offering those for about $250. And for those, we have all the equipment we need. We don't have to hire anyone. We don't have to bring in an assistant for anything like that. So it's all pure margin. All right, so we have no direct costs to that. For our wedding packages, we hire an assistant to come in, and we need to rent a few things from one of the local photography shops. So wedding package one, we think we can sell for about 3,000, and it costs us about 6,000 to deliver that. Wedding package two is a little bit higher price. We bring in two assistants, and we still need to rent some equipment. Um, so in this scenario, you can see we're heavy in the professional headshots, and we're going to ease down into zero because we don't want to do those anymore. Um, in just in this scenario. So year one, we did about 20. Next year, we're still going to need to do some just to keep the revenue up. So we did about 10, and then we dropped down to zero. Wedding package number one, we were able to land one the first year, and then five, and then jumped up and doubled into 10. Similar growth pattern here for the wedding package too, but you can see that these high margin packages at a higher price point are definitely bumping that revenue and that gross margin up. So that will take care of the above the line assumptions for this scenario. Let's jump down into below the line. Again, in this scenario, because the people that we're hiring um, are directly tied to delivering the service, I would include those costs in the cost of service and not in payroll. These are more, think of this more as like uh, if you wanted to think of your business as a corporation, this is like corporate uh, corporate payroll, like administrative payroll, which in this scenario we really wouldn't have any. Um, Sales and marketing, we may need to spend a little bit more money to attract some of these bigger ticket items. So I put a little bit more uh, money in the budget for sales and marketing expenses. So we're going to spend about $2,000 per year, $2,500 and $3,000 per year to get our name out to land some of those bigger gigs. And again, some occupancy, software, outsourced services, office supplies, and then I've given you some room to improvise and add your own categories and add your own values down here if you see fit. Um, and then again, the output is going to be very similar to the other sheet where we've got our units. So sales units, so let's say we sold 22 packages, total packages year one, flat in year two. But again, these are higher, they're shifting from the lower value services to the higher value services. So you can see that our gross margin, our revenues are jumping up pretty significantly over the course of these 3 years. Um, and then you can see what is my gross margin percent as well. Payrolls are at zero, sales and marketing bumping up just a little bit. My general administrative I've kept under control. They're still pretty low. Um, Total operating expenses, and then getting down into my profit. So if you're considering like how can I make photography like a full-time gig, this is a good way to think about zooming out, look at this over the course of 3 years and say like, all right, if I want to make $100,000, what do I need to sell to get that number to bump up? So maybe I need to bump this wedding package one up to 15, and you can see that gets me to 88. So I'm getting pretty close to my target salary or my target pay that I want to make give myself. So let's bump this up to 18, and boom, we just hit 105. So then I can say, all right, if I need to hit 18 and 15, that's 33 weekends, assuming you can do one a weekend. That's 33 weekends I need to get booked. So then you can start to think through like, all right, how do I book 33 weekends for wedding packages? Um, Jumping back over to the product side, if I wanted to be able to pay myself $10,000 a month, I can see in this scenario, right? If I have this general mix of items, I would probably need to sell around 1,200. So let's move this up to say 400. We're getting close. Let's make it 450. Boom. So we hit that $10,000 in profit. So theoretically, I could pay myself that if I wanted to. So I need to hit about 1,250 units. So then I can kind of work backwards from there and say, all right, if I need to sell 1,250 units to hit my target compensation for myself, all right, what does my sales funnel look like? And I know Adam's going to get to some of this stuff in one of the other modules, so I'll let him take it from there. um, there was one other thing I wanted to talk about, and it's escaping me right now. Hmm. Well, can't think of it. So, if you guys have any questions about how the sheet works, or if you have any just general questions, hit me up in the Facebook group, and I will be glad to help.